Afternoon, everybody. PM Path Chat covering equities. This is Bob Iacchino along with Mike Arnold from Path Trading Partners. Quick review of the stocks that Mike is going to be charting in this Path Chat. AVY, which is Avery Dennison. They are Labels Corporation. They are out of Glendale, California. CRZO, which is CRZO Oil and Gas out of Houston, Texas, oil and gas company. Vulcan Materials, VMC. We've talked about them before. Vulcan Materials is a Birmingham, Alabama concrete and asphalt maker, basically. Tesla, you know who Tesla is. Palo Alto electric car maker, TSLA. Freeport, McMoran, Phoenix, Arizona mining company. YELP, San Francisco social media company. And we've talked about NVDA, a Santa Clara-based chip maker. NVIDIA really got pummeled, really got pummeled, and with all the news media attention to their AI chip, wow, that news, or rather the necessity of that chip, really didn't hold the stock up much today. So let me turn it over to Mike so he can fill you in on what we're still in, what we're still looking at, and what we're out of.
Okay. Thank you very much, Bob. So AVY, we're looking for a possible horizontal channel breakdown. It was a lower probability because it was against the rising rotation zone. It's now gone higher. It is no longer a potentially valid trade. It is coming off my charts. CRZO is now an official triple bottom. So this double bottom play is no longer in play, off the charts. VMC, which did trigger, and this is on a weekly basis. Just giving you a quick update. It ran up a little higher, retested, where we're looking at the first cross rotation zone, prior support becoming resistance. Now it's gone lower, testing the 50-week moving average. Our next target on this is 112.10 for a stop reduction target, and then our next target after that, 107.75, which is a single target trade. This pullback actually enabled us to get in at a proper reward to risk. We like to get in these at a 1-to-1 or better. Tesla released earnings. We will be talking about this we'll be talking about it tomorrow on the podcast that is released this Saturday. So if you're curious on our thoughts on Tesla earnings, make sure you listen to our podcast this week. This triggered a double top on a daily basis. There's no way to get into this at this point unless it does pull back. Reward to risk is way off of this. It has not hit the stop reduction zone. So if it does pull back, it is still a viable trade. Now, this can even pull back and fill this whole gap without potentially stopping out the trade. So keep that in mind. Just wanted to cover that because if you're looking to even accumulate Tesla shares for some reason, we could see targets down at 246.72 to 240 very easily for a possible area you might look to accumulate. Not saying that that's what we're doing at all, just giving you, we have to let people know all different ways they can look at these things. Freeport, McMoran, can never say it. We're looking at a potential double top on a weekly basis. That would need a close on a weekly basis below 1313, which would then solidify our double top, and then we'd be looking at double target trade of 1066 and 984. So keep an eye out for that if you're watching that stock. YELP. So this is on a weekly basis. We're approaching a base of a potential double. We need a close below 3209 to trigger that. And then we'd have a two target trade of 2364 and 2082. Finally, NVIDIA, which we traded from a double bottom on a daily basis long, and it ran up to our targets at the 119 level. We then proceeded to get out, and we said we're watching it as it started collapsing for a potential weekly double. It's now down near the base. We'd need a close below 99.11 for it to trigger. Now this, I'm going to point out, is a lower probability double. we're against the R zone. The 21 comes into play here. So you could easily see this trigger come down, catch on the R zone, and then turn up higher because our stop reduction level is at the 150. I've looked at thousands of doubles, and this one falls into our lower category. Now, also, what's interesting is our stop reduction zone, if you go back to the daily, is really close. It's at the bottom end of this horizontal level where there was a lot of consolidation between against the rising R zone on a weekly, and that horizontal consolidation does reduce the probabilities, but we will watch this one. If it is to reach its full target, that would mean could trade all the way down to 78.29. Now let's put this in a little perspective. It's run up really far, really fast. So if we take even the beginning of this move and look at a full retracement, it would still be the full target on this weekly potential double is still above a 50% level for retracing the whole entire move. So it could even retrace into this whole 50 to 61.8, or if you're using the GAN levels to 62.5, and still just be a retracement in a larger bullish pattern for us. That's all I wanted to point out to everyone. Back to you, Bob.
Thanks, Michael. If you like these videos, hit the subscribe button. And after you hit the subscribe button in YouTube, a little bell will come up. Click that bell to make sure that YouTube lets you know when we have a video out, because obviously these are time sensitive. Also, follow us on Twitter, path_trading. Like us on Facebook at pathtradingpartners.com. And go to our website, pathtradingpartners.com. The last week version of the podcast is still up there. We'll be recording a new one tomorrow morning covering such interesting subjects as what's that thing called? The naked chicken tostada, naked chicken, what's it called?
It's a naked chicken chalupa.
Naked chicken chalupa. We're going to be reviewing that tomorrow because it is a Yum brand product, and we'll look at Yum brand stock as well. Cheers, everybody. Send us an email if you want at support@pathtradingpartners.com, and be sure and leave a comment in the bottom if you want to talk to us about something. Cheers, everyone.